timer is ticking. And right now it says 9 o'clock here, oh, sorry, 10 o'clock in Berlin, 11 o'clock in Ethiopia, Adama city. And I'm very happy to welcome all of you guys to our 8th blockchain at HTW conference goes to Adama. So a very warm welcome from my side. And I will not talk that long because I am very happy to hand over directly the mic to the dear President Lemi from the ASTO University, which is our partner university. And Lemi will do the first welcome remarks to this conference. I'm very happy having you here, Professor Lemi, and please, the floor is yours.
Thank you, Professor Katerina. Very good morning, all. Maybe I got information from Dr. Dereva that the higher officials will attend. I don't know whether they are in or not. I will going to address them, all of them, and please understand that my speech is based on the information I got. His Excellency Frau Regine Grienberger, Foreign Minister of Germany, Cyber Ambassador, Federal Foreign Office. His Excellency, I was also informed that His Excellency Dr. Habtamu Itefa, Ministry of Water and Energy of Federal Democratic Republic of Ethiopia, will join us. Maybe if that is the case, I'm happy to welcome him. His Excellency Atohalia Hailai, Ethiopian Ambassador, representative to Germany, if he's still in or not. Dear keynote speakers, His Excellency Ulrich Bindseil, Market Infrastructure in the Payment European Central Bank, His Excellency Dr. Joachim Schwerin, Principal Economist, Directorate General Internet Market, Industry, Entrepreneurship, and the Small and Micro Enterprise. His Excellency Dr. Thomas Duenser, Director, Office of Financial Market Innovation in the Digitalization, Principality of Liechtenstein. His Excellency Atohailu Jelde, Mayor of Adama City and the board member of Adama Science Technology University. Others, colleagues, dear chairperson, Professor Katrina, Professor Oliver, Professor Asnagech, Dr. Dereva, dear speakers and researchers, dear conference participants from different parts of the world, dear scientific community, ladies and gentlemen, I'm very glad to welcome you all on this special online blockchain conference with the title of Blockchain Goes to Adama, and that focus on how blockchain technology can enhance development in Africa. Welcome all of you, and I would like to welcome all. There is a long-standing bilateral collaboration between Germany and Ethiopia. This bilateral collaboration between the two big nations has also extended to university level. These days, there are many universities in Ethiopia and organizations from Germany that are operating in Ethiopia. The link between HTW University of Applied Science, Berlin, and Adama Science Technology University began in 2020, where the two universities signed Memorandum of Understanding and translate this MOU to actionable MOA. As a result of the cooperation agreement between the two universities, so far, a number of conferences, workshops, student and staff exchange, joint research, cultural exchange have been conducted. There is a plan to strengthen and expand this best experience to other universities and organizations in Ethiopia and Germany. For this achievement, I would like to thank Professor Katrina, Professor Oliver, and Professor Asnagech from HTW University of Applied Science Berlin and the top management of the university, especially the president. Today, HTW University of Applied Science Berlin and Adama Science Technology University have jointly organized this online conference where Professor Katrina is the initiator and is the host of this conference on the importance of technology for emerging country, especially for Ethiopia. The focus of the conference is on blockchain, trust technology, decentralizing technology, Web3, while considering green energy, hydrogen energy, solar energy, and others. This conference is believed to connect Ethiopian decision makers and government representatives with experts from technology industry, economists, scientists, and the legal profession to foster an understanding of how technology can support and facilitate solutions for Ethiopia. Blockchain technology is an advanced database mechanism that allows transparent information sharing with a business network. Energy companies use blockchain technology to create peer-to-peer energy trading platforms and streamline access to renewable energy. Traditional financial systems like bank and the stock exchange use blockchain to advance their service to manage online payment, accounts, and market trading. Companies in media and entertainment use blockchain system to manage copyright data. Since the government of Ethiopia is aggressively working hard to shift the existing traditional service to electrical-based service, I believe that this conference will definitely be helpful for the implementation of the efforts that are already in process. Finally, I would like to thank all individuals who make this online conference a grand success, and I would like to wish all participants of this conference a very fruitful time, and I would like to invite all participants, you all, to visit the beautiful and the green campus of Adama Science Technology University in Ethiopia during your convenient schedule. Thank you all, and I declare this conference is officially open. Thank you so much.
Thank you so much, Professor Lemi, for these kind words. And we are very happy that now the conference is officially opened. So therefore, we now can move on. And for this, I would like to ask Oliver, please, would you be so kind and prepare the sharing, because what we have now, we have some greeting note from our foreign ministry, and Dr. Regine Grienberger. She is the director for cyber foreign and security policy at the Federal Foreign Office, and she will also give us a warm welcome and why she is thinking that this conference is important. So therefore, please, Oliver, be so kind and share this.
Let me know if you have issues hearing the tone, but let's get started.
It looks great.
Excellencies, distinguished guests, dear students and participants, it is my pleasure to welcome you to the 8th Blockchain at HTW Conference. With this being already the 8th edition, this year's focus lies on exploring how blockchain technology can enable development, especially in emerging countries. Today's virtual meetup will provide you with both a chance to hear first-hand experiences from blockchain experts and a unique opportunity to connect with like-minded colleagues and peers. You will hear about opportunities as well as challenges with regard to a variety of topics, such as business, law and regulation, education, and renewable energy. You will learn from experts in their respective fields. You will connect with students as well as representatives of the Ethiopian administration and government. You can network with your peers and enhance your blockchain network. Addressing economic issues such as efficiency, saving valuable resources, or new participation opportunities is often accompanied by ecological and sometimes social sustainability questions. Blockchain technology will help to reduce transaction costs, overcome trust issues, and balance the level of information between parties. Although there are technical challenges yet to overcome, blockchain technology will not only have an impact on finance and business, but also on society and sustainability. As it is open for everyone, promises integrity of the stored data and offers, depending on the needs, transparency as well as confidentiality, It will be revolutionary for business transactions and economic growth. Because of the chances blockchain technology provides, Germany's blockchain strategy promotes further investments and strengthens innovation. We would like to use blockchain technology also as a means to enhance cooperation on an international level. In this spirit, we support Mayor Mr. Hailo Yalde's vision to shape the city of Adama as one of the first digital cities in the country. I am very optimistic that today's fruitful discussions and the positive outcomes and collaborations of this conference will be another step in this direction. Thank you to Professor Adam for initiating this conference and organizing it every year. It is clearly a sign of success that the conference today takes place for the 8th time. Thank you to Professor Lemi for your support of this project, and thank you, Dr. Diriba Eticha, for organizing the ASTU cooperation. This conference would not be possible without both of your ongoing commitment and engagement. I encourage you all to actively engage and share knowledge, engage in debates, ask questions, challenge assumptions, forge connections with your peers, be present and take it all in. I wish you a successful event.
Well, thank you so much, we can say. And I think she clearly pointed out what this conference could be about, so that we have the vision of using the technology for, let's say, for the sake for all of us. So we can do a lot of things. And I think many of our speakers, our distinguished speaker, will share their ideas and their vision. As we are now quite, and that's astonishing, a bit early than expected, probably we can move on, is our Excellency already in the call. His Excellency Minister of Water and Energy, Habtamu Itefa Galeta. Sorry for not pronouncing the name correctly, but is he already in, and can he take over the stage? Or am I too early? Well, then we probably make a little change. I then need to go on and ask our Mayor Yalde to take over, because he would be the next in the row to explain us what his vision of Adama is about. Mr. Yalde, are you with us? Okay, what we now need to do is we need to improvise, and we will do this. So I'm taking over, and I will tell you quite a little bit more about what the conference, let's say, program should look like, and what the idea is behind. So I think what we do is that we are looking into specific different kind of aspects, and why are we doing this? So we live in a world of everlasting change, and digital transformation has no end date. We all need to evolve and educate ourselves every day. So the conference is part of this. And the new technological possibilities, including the most recent discussion around AI, show us that we, as teacher, lecturer, professors, we are on our way to see what is going on, and we have to ask ourselves, and we need to understand the concepts, because our students do this very well, and they will challenge us. So we also need to learn, and I think we can learn very well from each other, and therefore the collaboration with the Ethiopian academia is, I think, a very important one. But not only that, we need to understand the new technologies in education. There's far more. There are other big questions we need to take into consideration and we need to discuss. So, for instance, also in relation to climate and the effects of climate change. And therefore, we need to understand how technology can be of use for us as human beings. So technology requires energy. So where is the energy from? And of course, very often blockchain technology is blamed for using too much energy. but I can promise you there are a lot of nice things on their way, so that this is not any longer true that blockchain technology causes so much energy consumption. But what I think, and we also heard this from the speech of Mrs. Dr. Grienberger. So she said that it's the financial inclusion or financial participation that could be of interest. And I think that is really a very important topic. So we need to understand financial participation, for example, how high is the importance for an economy. Could more wealth be created with and through the use of technology, especially in emerging countries? How is an economy such as Ethiopia strengthen its financial inclusion if financial inclusion is taken for granted? And what role does the available energy play in establishing financial inclusion and associated business activity, among other things? So you see, I'm just outlining some few questions here, but we all get the idea of what is behind. So we have really a lot of to understand and to explore. So therefore, let's use this conference to kick off and to make it happen in some ways while talking and while listening to our distinguished speaker, which are joining us here today. And once again, I would like to say so very much thank you for having you guys all here with us and allowing us to understand your specific ideas and thoughts. That is really wonderful. Thank you so much. Before we start and move on, so what's now going to happen, we are now looking for either His Excellency, who is now taking over, or the mayor of Adama, who will share their insights, their ideas, their vision about how Ethiopia and especially how Adama could be developed, in which direction. And after these two last talks, what are we doing then? We then have a little, not really a break, but we will go into the so-called water cooler talks. What are water cooler talks? As we are now not able to be at the conference on premises, we need to network, and the conference is always good for networking. So we will create specific breakout sessions where around 5 to 6 people will meet. And I'm going to ask you, when you are in this specific breakout session, please introduce yourself, tell a bit more about your background, and then before we start that specific breakout session, I will hand over a specific question you probably could discuss in that specific water cooler talk breakout session. This will end after approximately 18 to 20 minutes, and then we're back in the main room. And from then on, we'll take over. We continue to process the conference. So, but that was the little outline, what's going to happen today. And now I'm sure we can move on with our next speaker. So once again, who is
Mr. Hailu Jalle? The mayor is struggling with internet, so let's see.
Okay, and yeah, well, that is happening, right? We all have our issues and our little fights with the with technology. Yeah. So hopefully he can get it done. And is His Excellency with us?
Good morning, everyone. Can you hear me?
Oh, we are so happy to have you here with us. Thank you so much for joining us. So the floor is yours. Would you please be so kind and take over and give us a warm welcome from your side?
Thank you so much. Good morning, Excellencies, participants. Sorry for a little bit delay. I had another meeting with another team. That's why a little bit late. First of all, I would like to forward my acknowledgement for giving me this chance to attend this online session or conference. So on this opportunity, I would like to share the potential Ethiopia has in terms of energy. These days, as we all know, in globe, the main challenge is energy. Not only energy, but green energy. Developing nations like Ethiopia are the ones who are really gifted with available resource, with a good potential, with good capability. However, The limitation factor is the resource that will help them to utilize the exploitation. Coming to Ethiopia, in terms of the energy sector, we do have more than 60 gigawatt energy from hydropower, from wind, and from solar. To see them one by one, from hydropower, we expect more than 45 gigawatt of energy potential, where so far we could only develop about 4.8 gigawatt. Wind is more than 10 gigawatt. Solar is 4.5 kilowatt hour per meter square per day. So we can imagine how big capacity we do have. When we are talking of technology, when
Is it only me, or is it all that you can't hear His Excellency any longer?
Yeah, we lost him, I guess, maybe.
So right now.
how about now?
Now we can
Oh.
hear you. That's great.
Is
So
that okay? Okay.
that's okay. And please take
Okay,
over.
sorry for the inconvenience. Yeah. So just I was telling, so far we developed less than 10% of our energy potential as a nation. When we are saying we develop the energy potential, it means a blessing for Ethiopia as well as for our neighbors, for East Africa, because we are sharing our energy resource with our neighboring countries like Djibouti, Sudan, Kenya, and South Sudan in the recent times. We are going to do that. So when we see the corridor from Addis Ababa to Djibouti, that is mainly passing through Adama, where we do have huge potential for manufacturing sectors, mainly for different industries, huge industries, including manufacturing ones. So there is a demand for energy. For that, we are the ones who play the key role. And in the future, again, the main line, the main distribution line we are having from the main station from Addis to Djibouti is also passing through Adama, where the government is paying more attention towards the availability of energy supply for railway, for tourism attraction, for special zone. That is what we call the Grand Special Zone, which is near to Adama or near to Mojo, if any one of you knows that. On this occasion, as a minister, I really would like to invite all our partners abroad, either in Africa or in Europe, mainly from Germany, if they can really come to invest, come to work on development of energy in Ethiopia. Because the energy we are producing in Ethiopia is green, and all our neighbors are demanding for that. Our recent opportunity that we are interconnecting with East Africa through the energy grid system will be making us the hub for energy production. Our Great Reference Dam, the biggest dam on Nile River, we are building, is expected to be completed in 2 years' time. So far already we have produced more than 540 megawatt from our dam, where the two turbines have total potential of 750 megawatt. By this 2024, at the middle of that, we expect additional 5 turbines will be activated, and that will be increasing. This means for us that will be increasing the energy production capacity of Ethiopia. This energy production capacity still needs 2 main activities. One is to upgrade, to modernize our distribution system. That is even creating different problems in our energy system. The second one, what actually we are doing from the government, is unbundling. Unbundling means production, distribution, and then the service. All these can have their own check and balance. Doing so, this will create more opportunity for private sectors to get involved. Not only private sectors, even the financiers also can look into Ethiopia. Honestly speaking, what I would like to add here is we encourage people, we encourage investors to invest on manufacturing sector rather than on the energy, because our energy is the cheapest, because it is subsidized by the government, where the rate that the investor will pay for kilowatt hour of the energy they utilized will be the cheapest and the lowest in Africa. This we believe it will be attracting more investors. The second one, all manufacturing sectors who can get involved in these countries, they can also distribute to our neighboring countries with cheap energy, with the green energy supply that will be making that one more attractive. Finally, what I would like to add, especially on the development corridor, we have identified at the national level is from Addis to East side, that is mainly passing through Bishoftu, Mojo, Adama, and so on, that extending to Djibouti. This will create more opportunity for the city, for Adama town, even for us to the university, because some of the works that we are doing with them, as we have MOU, a memorandum of agreement with some research activities, will be helping us how our work will be scientific. Finally, for my colleagues from Deutschland, really the experience that I myself, when I studied there, I did my PhD in Stuttgart, the perfection that we learned in terms of the energy management and every activity, I think that will need to be strengthening our relationship, our cooperation, and I wish you successful discussion from my side. I will keep on attending your discussion online here, and we remain committed also for further collaboration. Thank you so much.
Thank you so much, Your Excellency, for this wonderful talk. And you triggered something in me, because when we're talking about technology, technology is not thinkable without energy. So we need to have huge amount of energy just to go on and to move on into the digital world we are having in front of us. So, and with this, I would like to ask, Deriba, can you tell me a bit more about the Mayor Yalde? Is he now able to attend the call?
Maybe he wants to just speak a little bit using mobile phone. I will share his slide. So if he's audible, he's going to speak. Mr. Hailo, can you say hello?
Hello, Mr. Hello, guys. Hello.
Oh, that's hard to hear. Can you?
It's not clear, yeah.
Can you hear?
No, at least for me, it's not very clear. What about the others?
Thank you very much. I'm sorry, my connection is a little bit problem. I couldn't join the platform.
Okay, so then, Mr. Yalde, please move on, and we would like to listen to your words.
Thank you. I will just share some little information on my slide through this doctor's cell phone number. If you allow me, I will start to share some information about my city.
Yes, please take over. The floor is yours.
Thank you, Your Excellency, or honorable participants, organizers. I am so happy to be on this great conference.
Sorry, it's not working. Deriba, have we another chance? So I would like to say the following, because due to the technical glitch we've seen here, let's stop this right now. Probably we'll get him later. And so we're just postponing his speech. Deriba, you will organize everything in the background, okay?
All right. Okay.
Hello, doctor.
What we are doing right now, we are going into the so-called water cooler talks. So for you guys, a little bit to refresh yourself, and we will talk about one specific question which I have prepared. And give me a sec. Where is my preparation? So my preparation is like this. I would like to ask you to think about the following in the breakout session. Where is the potential in creating wealth for an emerging country when using DLT blockchain technology? So again, when you now go into the so-called water cooler talks, please be so kind, introduce yourself, tell a little bit about the background, do the networking part. That's the most important thing why we've created this water cooler talks. So please network. And if it's time still left, then you can start to think about, well, how can we use that technology to create wealth for an emerging country like Ethiopia? What needs to be done? And probably we'll also get some new kind of hot topics out of this talk. So therefore, enjoy your water cooler talks. Please, Jette, open the rooms. I would invite all participants now to join the breakout session of your favor, whatever you like to listen to. So we have our distinguished speakers for the breakout session finance, as well as for business. And the third one is education/law. So Jette, please be so kind and open, and we'll leave it up to the individual to enter the breakout session everyone likes to join and to be part of. And of course, I would like to invite my speakers for my session, which is finance, to come with me, and then we can move on. And Oliver, you go into your breakout session, which is
it's going to be business. Am I allowed to do a pitch? How great this session is going to be?
Okay, do the pitch.
Everybody into my session, or how are we going to play this?
Do the
Mine
pitch.
is about education and legal. You're very welcome to join my breakout session, which is very interesting. Education is the background for everything. Come on.
Diriba, you will win as always. Okay. So it will be Diriba hosting education and legal. It will be me doing business and Katarina doing finance. And please join us, and we will have some fascinating stories to hear and to discuss, and really looking forward to it. So see you all in a bit.
No, but before we do this, 1 second. Please don't have this kind of FOMO, feeling of missing out something. What we are doing, we are recording.
Thanks for the
That was the
reminder.
little hint for my co-host. We are recording each session, and we will afterwards bring it all on the website, so you will not miss out anything. So please jump into the breakout session you like, and don't feel like, oh, I will miss something. You don't, because it's all recorded, and later on you can digest whatever you want to digest. So with this, now we can open the breakout sessions. We will start recording there locally, Deriva and Oliver.
Yeah.
And then we will hear really good talks from our distinguished speakers. Welcome back, guys. I hope you are refreshed. And now we have the pleasure of welcoming Professor Ulrich Bindseil at our conference here. And please let me first introduce you to Professor Ulrich Bindseil. He will give us a talk about the digital euro, use cases and key features of a retail CBDC, which I think is really an amazing talk, and we will see what is in. So a bit about Professor Bindseil itself, or himself. He's been the Director General for Market Infrastructure and Payment at the ECB since November 2019. Previously, he was Director General for Market Operation for 7 years, Deputy Director General in the same division for 3 years, and Head of Risk Management for 4 years. He began his career at the Deutsche Bundesbank in 1994 after studying and earning his doctorate in Saarbrücken. And with this, I really would like to welcome you, Professor Bindseil, at our conference. And I think we all are very eager to listen to what you want to share with us and your insights. The floor is yours.
Yeah, thank you so much for inviting me. And it's a pleasure to be here and to present to you the Digital Euro project, which I must say is not primarily a blockchain project. So you will see it is primarily a functional project, and the technology is of course also relevant, and I will say something about it. I will share the screen now with you, so give me 1 second to do that, hopefully smoothly. 1 second. Yeah, I hope you can now see it. So the Digital Euro project, yeah, great. Investigation phase, outcome, and lessons learned. So this is really a big project we have launched now 2 years ago. It is in one sentence. It is about providing central bank money to everyone in digital form, not only in the form of paper money. And yeah, payments has become more and more digital, and therefore also central banks are naturally asking themselves if they should not also follow technology instead of just sitting on old technology, which is useful and good, but is not, let's say, reaping the benefits of what can be done on top today. And yeah, a key starting point is the evolution of payment preferences, as we can yeah, observe them quite well, because we do some studies to capture the trends in use of different means of payment at the point of sale. And as you can see in the chart, we had a decline of the use of cash between 2016 and 2022. If you count the number of transactions from 79% of all the point of sale transactions to 59%, so a decline of 20 percentage points. If you extrapolate this trend, let's say over one more decade, you will see that cash is then a relatively small, minor means of payment. And yeah, the question is, what does it mean for central bank money, for the usage of central bank money, for the coexistence between central bank money and private money that we had now for quite a while? And if digital central bank money is then not a necessity to preserve what we call the monetary anchor. And yeah, why? I mean, some people say, where's the problem? We have efficient private electronic payment solutions, but one high level argument, but I think a very relevant one, is that private money is essentially a convertibility promise into central bank money. I mean, what makes a deposit with Bank A and a deposit with PayPal and a deposit with whatever other form of private money equivalent? In principle, what holds it together, it's a convertibility promise. It is defined by its convertibility promise into central bank money. So central bank money holds everything together. And in this sense, the disappearance of central bank money in practice would raise a question about the anchoring of the monetary system. Another point is that money is a network good. No, so typically few providers will eventually dominate this market. And this means market concentration and easily abuse of market power. And one reason probably to keep public money, to have public money in the economy, is to limit this abuse of market power by private players. And I think it is not difficult to identify the relevance of this problem in payment markets where you have very few providers. Typically, you have this abuse of power, and staying, let's say, or keeping a central bank offer in the market on top of the private solution seems also important from this perspective. And last but not least, one could say efficient and resilient payments are not just one important function of modern society, but it's a precondition of it. So the division of labor, the specialization we all do in our daily lives is only possible thanks to the possibility to pay. So it is really the basic of modern society, and therefore of high public interest to have also an offer there controlled by society, offered by the public sector. Okay, and the ECB is not, unique to that. This is, something that many central banks have identified as a relevant topic. And yeah, I mean, often central banks in emerging economy, in developing economies, are as advanced or more advanced than the so-called industrialized countries on CBDC. I mean, you have that, I think, in digitalization quite often, that the, being an advanced industrialized country is not per se an advantage if it's about, digitalizing and making this move quickly towards reaping the benefits of digitalization. I mean, we have seen, I would say it's a level playing field. Many are moving faster than we do also in Europe. Anyway, this slide is just to say it's not ECB specific. It concerns countries globally and countries which are very different. And one point that is often made in Europe, at least, is the one that central bank digital currency should not undermine financial stability. And maybe in the ECB, in the euro area, this topic was considered particularly important because we had a phase of zero interest rates or even negative interest rates. And, the assumption is that digital euro would probably not be remunerated. So it would be zero remunerated. And therefore, if you have an economy where typically short-term nominal interest rates are 5% or even higher, then of course there's no issue that CBDC would become a disproportionate store of value. But in the case like the euro area, where we had the experience that market rates were zero or negative, then of course digital euro with zero remuneration could become a large store of value, undermine monetary policy and financial stability, because deposits held previously with banks could shift quickly into CBDC. Therefore, the conclusion for the euro area at least was that we need limits of holdings. We don't want unlimited holdings of CBDC because of those risks. The use of digital euro outside the euro area, I think the basic idea of most central banks working on CBDC, including ourselves, is that one should not initially allow for, freedom to hold the CBDC in, across the globe. Yeah. So there should be a limitation in principle to residents or to visitors in the respective currency area to prevent dollarization, as it is called, to prevent uncontrolled capital flows and dollarization. And I think this is a point made typically by many, smaller countries. Small, I mean, let's say small compared to the big blocks like the euro area and the US, that they have an interest that there is not, this vehicle for electronic dollarization, so the usage of a foreign currency in a country, which undermines monetary sovereignty, of other countries. So the basic presumption is no cross-border holdings of digital euro, which doesn't mean that it would not be usable for some, let's say, international use cases. So, but it should typically be with a foreign exchange transaction. So it should be converted into the foreign currency when it crosses the border. Example, e-commerce. If a European citizen or resident wants to purchase something in any country of the world via e-commerce, it is desirable that payment can be done in digital euro, but there has to be a currency conversion in the same way as there is an ultimate currency conversion if you pay with your credit card in e-commerce internationally. Yeah, so there is someone does the conversion. The private sector somehow organizes the conversion. Here it should be the same. Cross-border payments, yes, with currency conversion, so that they don't lead to cross-border holdings, which for the reasons mentioned previously are problematic. So yeah, here are some principles, further principles of digital euro. So digital euro should complement and not substitute cash. We as central bank, we like cash. We are happy if people use cash because cash is our product. Nobody else issues banknotes. But we feel that it's the citizens who use cash less and less. So we complement it with a modernized, let's say, form of central bank money available to all. We want to offer it online and offline. I mean, of course, most of the time you can go online in Europe. There is a wide coverage of let's say, online accessibility. But still, because if we think about the cash, the lesser use of cash is, of course, offline. And if we want to close a gap which would arise if cash is no longer used, then offline would be an important element. So the conclusion was, yes, let's develop it also offline, even if currently, there's no private instrument really which is used offline for reasons that it's technologically more challenging, and it is also maybe not demanded so much in practice, yeah, but still. Then we want a high level of privacy. We are not interested in seeing users' private identities, yeah. So by design, the ECB will be prevented from seeing the identities of the holders of digital euro as a key, let's say, element to reassure the user that digital euro will not lead to more, let's say, state control. I mean, there are some people who have this intuition, this feeling, this fear that digital central bank money is about extending control of people. And I can guarantee you that's not a motivation. And to underline this, we will not, it will be designed in a way that identities will not reach the central bank. We will not know who is behind different positions. And then we say the digital euro will not be programmable. And maybe from now of, let's say, the perspective of a blockchain conference, you may find this disturbing. But let me explain what we mean with that. We mean with that digital euro will never be constrained in its usage. So some people, again, have expressed the fear that we will use, or the state will use CBDC to control people more. And for example, that certain payments will be constrained in terms of what they can be used for. For example, someone receives a support from the state, financial support, but then the money received would be programmed in a way that it cannot be used for buying alcohol or cigarettes or whatever, or meat. And this, when we say it will not be programmable, we exclude this type of constraints, yeah? So the money, one unit of money will always be one unit of money, freely usable. We want, of course, to allow for automated or machine-triggered payments. That means we want to allow that digital euro wallets are accessed via programming interfaces, which can then trigger payments from the digital euro wallet if the owner of the wallet has agreed to it. That basically applies open banking, what is called open banking, to digital euro. So accessing accounts via interfaces with the consent of the holder of the account to allow external programs, companies, machines to trigger payments. I mean, that allows for a lot of innovation, and that we want also to have in digital euro. Here is a timeline of our first project phase, and there are lots of elements. You don't try to read everything now. Here the summary is just to say that we started the investigation phase 2 years ago, and it will end in October this year. And what is an investigation phase of a project, according to the Eurosystem terminology, it is basically the project phase where you define exactly what you want to do, the user requirements, the scope of the product. So you define everything that is needed to enter the next phase, which is normally the realization phase, where basically you implement, you program everything, no, both on the side of the ECB and on the side of the users, because a project like this one, it's not just an internal ECB project, but the industry will have to, work it out as well, because our idea is that we, rely on the payment industry for the distribution of digital euro. The digital euro needs to be distributed by payment services providers, banks and non-banks. It needs to be accepted by merchants. It needs, to be processed by, all the parties in the payment ecosystem. We don't want to set it up as a closed loop, separate solution away from the, let's say, solutions, all the things the industry has developed. Yeah, we want to rely on synergies. We want to keep it open for competition and innovation, and not, again, have it as a closed form solution, which means that the industry has also to implement it, and all that comes after the investigation phase. But the investigation phase achieves clarity on what it is about. It should end with user requirements, which are detailed enough, for everybody to move on and to start implementing, whereby this investigation phase has not exactly fully led to user requirements. We need some more work before really this starts. And a key question, at the beginning of any, payment instrument is, what use cases should the payment instrument cover? And what we concluded for digital euro, and it's not very, very creative, but that the big use cases should be covered. And the big use cases are person-to-person payments and payments at the physical store, what is called point-of-sale payments, and e-commerce online payments. So those are really the big use cases. And we were convinced, that not including those use cases would not allow for the network effects that a digital central bank money requires to, become really a common means of payment. And then last point is also payments to the government and by the government. So here the feeling is that central bank money must also be usable for payments to and from the government. So this will also be included in some, at some stage at least. But the first 2 points are the crucial ones for the first release. Online, offline, I mentioned that already. So online is a standard, will cover all use cases for sure. And offline will be available for the rare cases there where, people will have no online access. And by offline, we mean, that both sides, the payee and the payer, are both offline. And then you need to store the positions in a secure device, probably a hardware device. And typically you need to validate what happened offline later on online to be sure that everything was right. Offline is definitely more vulnerable to attempts of fraud, of cyber attacks, let's say, on the integrity of the system. So therefore, offline requires online validation ex post to be sure, that there's no money created through some fraudulent, let's say, hacking of the secure offline payment solution. That I also mentioned, we want to distribute the digital euro via the industry, financial intermediaries, we don't want ourselves a direct customer relation with the client, the user, the ultimate holder of digital euro, because the industry, the financial industry, has the capacity, has been doing that, has the expertise, has it anyway for its private payment solutions. So we don't want to create a parallel universe, which would be inefficient and suboptimal. So we want it to integrate the distribution and acceptance of digital euro in the industry and the solution the industry has been doing. And we of course need at the same time to achieve our policy objectives. So on one side, we want to use industry. On the other side, we want to ensure that digital euro has the properties we want it to have for policy reasons. And for that, we want to take what we call a scheme approach. So we design a scheme which contains the common rules for participants to the digital euro distribution and acceptance. And everyone, is then open to adhere to the rules and become part of the scheme. And the prescriptive parts of the scheme should ensure that we have achieved our policy objectives, and they include a homogeneous end user experience. If you use digital euro, the user experience should be somewhat, consistent across the euro area and across the way you can use it. It should achieve pan-European reach. So wherever in Europe you have opened your digital euro wallet, you should be able to use it within all parts of the euro area in e-commerce, or if you travel to the most remote corners of the euro area, everywhere digital euro should be accepted. And this is again on the distribution. So the supervised intermediaries would take care of the end user onboarding, the end user servicing, payment initiation and validation. We as central bank would do the settlement, and supervised intermediaries would do again the post-settlement, the confirmation of payments and the offboarding of people if they no longer want to use, of course, digital euro. And one important, element now is the current legislation that was launched by the EU Commission. And I think that is accepted now in most countries, that issuing a CBDC is not just a matter of the central bank, but society as a whole, should be behind this innovation in the services of the central bank. And also in Europe, therefore, we have the European Commission. We entered into a dialogue with the Commission already 2 or 3 years ago, explained the project, the intentions, and the Commission then worked on a draft legislation, which provides a legal certainty and gives some guidance to the ECB on certain topics which are relevant from the perspective of society and not necessarily a matter for the central bank to decide. And one of that is the degree of privacy in the use of digital euro. So in Europe, you have on one side cash, which of course has fantastic privacy properties, but still with some rules which should limit the extent of possible money laundering with cash. No, so you have rules that you cannot, pay in Germany. You cannot, buy a house and bring €500,000 in cash to buy the house. Whatever. I think if you bring cash to a bank beyond €10,000, you have to explain where it comes from. No, and the question is, and that's for cash. For digital payments, it's different. there in principle all the data has to be maintained in a way that authorities can check that there was no money laundering if later on there's suspicion that there has been somewhere illicit payments or money laundering. So the question for society and for the legislator is, what happens to digital euro? I mean, do you want it to be treated exactly in the way that private digital payments are treated from the privacy perspective? Or do you want, you know, to treat it a bit more like cash, because you think it's legitimate to have a very high degree of privacy for relatively low payments? So question mark, it's not for the ECB to take this decision. So in the legislative proposal, there is a view taken that so far it seems for small payments, there will be a very high degree of data privacy that could go beyond the data privacy for small payments for commercial bank money. But again, this is for the legislator to tell us. And the legislator also requested us to apply offline payments, to allow for offline payments from the very beginning, and to have holding limits to control that the central bank balance sheet doesn't balloon too much, because people would, you know, just transfer too much of the commercial bank money into central bank money. So here our board member ECB board member Fabio Panetta, who is in charge of the project, he says that this proposal is important to the digital euro, and you know, shows a support in a certain way, I would say, of the people, because the legislator represents the people. So how do we continue? In Europe, once you have a draft legislation by the Commission, you know, a process is launched, the so-called co-legislation procedure, where also the European Parliament and the Council, which is the governments, has a say. So this will be ongoing for 1 or 2 years even. And therefore, of course, also with our project, you know, we can continue working, but we have to be aware that the final legislation will be binding on us now, and that we may have to adjust the project depending on the final legislation. So yeah, we will work in parallel to this. And yeah, we will, you know, enter the next phase of the project, probably, if the Governing Council decides so, in October. And then, yeah, we will, you know, not start directly with the programming, the code, doing the code, you know, but we need a bit more time to await the legislative process progressing, and also for clarifying a few further aspects internally. So maybe the classical implementation realization phase will start in 1 or 2 years. Before that, we do further, you know, preparatory work. And yeah, then in a few years, the digital euro could be issued. And yeah, I would have no doubt personally that central banks are right, you know, to accept that technology changes society, changes payments in society. And it would be wrong, you know, if the central bank would give up on providing certain functions to society which prove to be useful only because it sticks to technology which is less and less used, and which was invented in the 17th century, and all players, you know, move on, use new technology, and the central bank would, for reasons which are really unclear, not use the technology which is you know, more convenient, which, you know, is appreciated by the citizens. So we should preserve the coexistence, basically, of central bank and commercial bank money that worked well in the past, also in the future. And that's, I think, the final slide. So it's a natural part of the evolution of money. Central bank money should evolve. It has evolved in the past, should evolve in the future. It should, yeah, make life easier to people, it should, bring in some competition or preserve the competition that the existence of central bank money has brought in the past, also into the future, and it should increase resilience because it's, again, like central bank money is somewhat an independent pillar of the payment system. Preserving it should also increase the resilience of payments in the future. So thank you very much for your time, and I'm happy, of course, to respond to any questions if that's useful.
There are questions. Thank you so much, Professor Bindseil, because not only me, while you were talking, so many things are popping up in my mind, but I also have seen that there were others who are asking specific questions. And I would like to start with Ralf Knobloch, who wanted to know what is your definition or meaning of private money, something you've mentioned at the very beginning of your talk. What is the definition of private money?
Yeah, private money is, the main form of private money is commercial, what we call commercial bank money. So typically the deposits, the side deposits you hold with a commercial bank. But, in other places, there are also other forms of private money, like, money or positions on a mobile wallet, provided by a non-bank. That is also possible. So I would say it's any form of liability issued by a private entity that can be used for payments and that is convertible into central bank money.
Okay, thank you for clarifying this. There's another question Richard Renner was asking. So the goal of not being programmable is fine. How can this be guaranteed? That you are not program the CBDC?
Well, I mean, if this is, I would say you can test it every day. I mean, if you feel, you cannot use your money with full freedom, but you are constrained, then you know that there's a problem. No, so I mean, I guess the question reflects the fear that in the future, even if now the central bank says it's not programmable, in the future it will change, and of course, if we cannot guarantee against any scenario where future governments, will impose on us through legislation something that we cannot exclude, but it will never come from the central bank because the central bank has no interest. It would go really beyond the scope of the central bank responsibilities. The central bank wants to issue something for general use. It has no role in constraining people in the use of money. So only if a future legislation would force us, then of course in theory, we have to comply. But that's very remote, and I think this type of fears is universal, and of course cannot be negated for anything in society because society evolves and legislation evolves. But I find it's very remote for digital euro.
Okay, we'll keep our fingers crossed that it all turns out as we want to have it. Last but not least, I would like to ask another question from Ralf Knobloch. He wanted to know, is it planned to use zero knowledge proof technology to guarantee anonymity and like cash money has today? So what kind of proof you are going to implement?
Yeah, that is still. Can I say one more thing on the previous point, the programmability? What holds for digital euro holds, of course, for any private money as well. No, I mean, if the legislator wants to control people, it's not easier for central bank money than for private money. The legislator can do anything ultimately. Yeah? So I would reject the claim that this is a matter of central bank money more than any form of payments. And then on the privacy, the protocols which will ensure privacy by design, that is something which is still being studied. I mean, as I mentioned, one thing is that we as central bank will not be able, it will be designed in a way that we have no access to private identities. Yeah, the private identities of people will be held at the level of the intermediaries, yeah, not at our level. So if the fear is that the state, the government, you know, the public sector gets more information, I would say no, because we will not even know the identities. The other question is if the privacy is strengthened in terms of the information that is used, you know, amongst the private sector industry, which, you know, supports distribution, the merchants, the acquirers in this universe. You know, will we have more suppression of information? I mean, there will be no use for commercial purposes, but what is the extent of new protocols we want to introduce to, you know, suppress information relative to the current standards we have in private money payments, no? And that we are still working out. The more, of course, you deviate from current practices, the more issues you have that arise, you know. I mean, you have cost issues if you design completely different protocols, you know, to avoid that in the private industry, certain information is treated or available in the same way as it is for commercial bank money. Then you have to invent new protocols. You know, people have to apply new protocols. You reduce synergies with current private sector solutions. And that's, you know, there are trade-offs. It's a cost-benefit question. And we are still working on it, I would say. We take a pragmatic approach. I mean, we can guarantee that we have no interest, you know, in the use of data. And it's a matter, you know, of feasibility and cost and those trade-offs. But again, you know, that I want to repeat, we will not have access to private identities of people.
With this, and even we have far more questions in the chat, but I would like to stop here and say thank you so much for your answers. Thank you so much for being here with us, and I hopefully you can join us a little bit longer. And once again, thank you for the insights. And I think, as you can see, based on the question we are now seeing in the chat, it is really of utmost importance that we discuss what is the meaning behind CBDCs and how it can somehow strengthen the existing financial system, or is this probably not really needed because it's already there? So I think changing idea, talking about the ideas, discussing the ideas, this is really relevant, and I hope we can continue doing so. But for today, I would like to say thank you so much, and I would now like to hand over the microphone to our next distinguished speaker, which is Dr. Joachim Schwerin. Joachim, I'm very happy having you with us here, and please allow me just to give a small introduction about who you are. Dr. Joachim Schwerin is the principal economist in the unit responsible for digital transformation of industry within the what is it? Directorate General Internal Market, Industry, Entrepreneurship, and SMEs. So he is really very much after looking for innovation, thinking about innovative strategies, and therefore I'm very much interested in listening to his idea, his vision of what blockchain and how to use blockchain for social transformation in finance and beyond. Therefore, dear Joachim, the floor is yours. Thank you for being with us.
Thank you very much, Katharina, for the kind introduction. And I'm currently in Vienna at a digital assets conference. So I'm grateful for the Chamber of Commerce that they have given me a room, although it's not fully closed. So you will hear some background noise, but I hope that it will work out fine. I'm very happy to talk about a broader topic. We've seen how fascinating the topic is when we discuss it in specific applications like the digital euro. What I would like to discuss today is how we at European level, at the European Commission, see blockchain not only as a technology, but as an enabler for societal transformation. And this has a history that goes a little bit back. I will take you through that. I will explain what we have done under the current mandate. I will discuss a little bit towards the future, what our upcoming plans are. But the bottom line is indeed that we are talking here a series of linked initiatives that not only relate to finance, but that also relate to the real economy, which is my domain. I'm responsible for developing blockchain applications for industry and SMEs, and also for developing the European token economy. So in that sense, we have a quite broad agenda for which we see blockchain as the basis. Perhaps a good starting point, there are several good starting points, but we need to start somewhere, is the year 2015, when the Commission under President Juncker took office, and we did a sort of big brainstorming in the European Commission of what would be the future innovation priorities in Europe, not only for finance, but for all policy fields. I proposed blockchain at that time. I didn't propose it primarily for finance, but I proposed it for applications in the real economy. And after a lot of discussions, where it was very positive to see what deep understanding already at that time of the technology existed, we made a statement in 2016 that blockchain is one of 4 breakthrough technologies on which we bet, to put it this way, which we support in a very positive way in the next decades to come, because we are convinced by the benefits. This is, I would say, surprising also, and I say that as an economic historian, that we have never had a technology that was less than 8 years old in our history that has been endorsed for so many applications that early in its development cycle. And there are reasons for that. And the reasons take us back to the very beginnings. Most of you will have lived through the financial crisis of 2007, 2008, or have an idea of what happened at the time. And I was involved at the time because I was dealing with the interface of industrial and competition policy, with rescuing all those banks that got into trouble. And we have a very interesting point in time, 6 weeks in the autumn of 2008, when we had the insolvency of Lehman Brothers, and then we had the Bitcoin white paper. So essentially, historically, the same moment in time, it was at that time, it was unrelated, but there's a lot to discuss about that in hindsight, is that we had the deepest point of what I would call the centralized legacy system, where not only the banks, but in the wake of that, large parts of our real economy, especially the smaller enterprises and whole economies, think of Greece at the time, but also others, had been heavily hit by this crisis of sort of risk management or absence thereof in the centralized silos. At the same moment, you have to glimpse the first light of what we call decentralization. Of course, there has been a lot of work on ledgers in the past. Ledgers are a very historic notion, which then just got digitized. There's also a lot of work in terms of programming, encryption, etc., that has earlier origins. But I think the Bitcoin white paper is the nucleus of this discussion. The reason why we started to take this seriously very early is that in Europe, we have a specific situation which is different from other parts of the world. In Europe, 75% of our small and medium-sized enterprises and our startups depend on bank financing. That is much higher than in the US, that is much higher than in other parts of the world. And I note only in passing that despite all our measures that we did, if you look at the current figures and calculate out the COVID aftermath, we are still at the 75% more or less. So we have a very high dependency of our economy on the banking sector with its instabilities. And we had a political mandate at that time to start looking for alternatives. Now, the obvious alternative that came about first was crowdfunding, was alternative finance. So we started exploring this notion of small local platforms where people know each other, where people trust each other, and where they give, where they lend money, where they donate money, where they do money transfers to projects they know well in order to support them for a short point in time, and when there is certain trust in this development. We started using the opportunities to build a policy space around this. We came up very much later also with a regulation because we wanted to have the innovative effects first. But crowdfunding was key because crowdfunding had a lot of good ideas. It had the decentralization, it had the local approach, but it had big difficulties in scaling. And this is where the blockchain comes into the play. What the blockchain, in my opinion, essentially does, it is using the benefits of the local economy, of a trust-based interaction of people that have similar ideas, very similar preferences, but enables this mechanism to scale globally, to even make very small entities competitive and visible at a global scale, and thus overcoming the historical problem that we've always had in leveraging these benefits of self-organization. And if we look back into the human history, what we can observe is basically that this has been throughout the by far largest part of our history as mankind been the natural approach of things to do. If you look back into the past, people basically had a horizon of perhaps 5 to 10 kilometers outside of their village. They didn't get much further than that, at least most of them. They had to deal with the people that were there. They had to govern common goods. They had to find governance mechanisms and ways of also organizing the financial transfers. And this, of course, then got only diluted through the emergence of ever more intermediaries that at the beginning certainly had their positive functions, but where we might have a long discussion at this stage to what extent that still fulfills the purpose or has not grown into a pool of risk and self-interest at the same time. So basically, we forgot how to deal with our own interests because we placed them to some intermediaries, and we have also a little bit forgotten of how to self-organize. This is what the technology can do. And this is where we thought that, okay, let's combine the need to diversify the sources of finance of our economy together with the opportunities that are created through localization now on the digital ledger, to put it this way, in order to see what we can achieve with that. And there have been 3 phases in the development since then. So the first phase, I would say, in the policy cycle was from the financial crisis until shortly before we made this statement in 2015-16, which was what I call an era of defense. We had to stabilize the banking systems. We had to find rules on how we see capital market regulation in the future. And we just had to, I would say, deal with the mess without having the luxury to be innovative in terms of political thinking. Then came a period of exploration, I would say, until about 2019, when the current commission took office, where we experimented with all sorts of digital ideas, also with the Capital Markets Union, with the FinTech Task Force and Action Plan, where developed a number of ideas to look at how we could shape this future world, but most of that was unconnected. So we had a lot of intellectual thinking. We created the basis, like with the Blockchain Observatory and Forum, with organizations like INATBA, the European Blockchain Partnership, and others, where we decided to look into this matter, to do some mapping, to find the topics for the future. And the topics for us at the European level were mainly 3. So we wanted to support innovative solutions. We wanted to give a positive message to the market that this is something that we support. We had to ring fence it against certain risks, especially the cyber risks, and we had to go into the learning, the education, in order to have the capacities to do that. And then we have entered a phase since, I would say, 2019, where we have delivered on what we are saying. And this is now the end of the current mandate. You know that next year will be a very interesting year because the current European Commission comes to a close. We get also elections of the European Parliament in June of next year. We then get a new European Commission with a new 5-year work program at the end of the next year or the beginning of the year thereafter. We have, by the way, also globally other events that are of interest, like the US elections and many other things. So it will be an exciting year ahead. What I'm saying in terms of our own work is that indeed our current policy cycle has ended with 3 things that we have done this year. And we have finalized the political trialogue on the markets and crypto asset regulation, the MiCA regulation. So that has now entered into force. We have come, and we heard that before, with a proposal for a legislative framework for the digital euro, which, by the way, and Ulrich Bindseil said that, is a package where we not only have a draft regulation on the digital euro, but we also have a draft regulation on streamlining the legal base for cash, because we are very big supporters for cash. And I was very happy to hear Ulrich Bindseil talk about this, because cash is a unique thing in terms of privacy and civil rights, I would say, where we have a strong policy not only to keep it, but also to the extent possible to strengthen access to it. And the third thing was the communication on the metaverse, or the virtual worlds, as we call it, as a start of a discussion process towards Web3. So this work is terminated, but of course, and I will come at the end of that, of my little speech to that, there is new initiatives coming ahead. Now, the bottom line, as said, is we should not mix up the historical origin of blockchain technology from specific use cases with the main applications that see today. Blockchain, and that is what I stand for, and I'm very, I would say, vocal on this, blockchain is not a technology. Blockchain is a societal revolution because it gets us back to where we have always been as humanity. And it is a coincidence, of course, we have to deal with that, of course, the use cases of blockchain, as said, started with Bitcoin. So it was quite natural that, of course, also our regulatory approach started with cryptocurrencies, because at the end of the day, this is where this emerged. But also, and this is important to see, we had the history of the financial crisis. So there is a certain need in the system for stability, but also financial regulation is the easily available part of regulation that you can work upon. Financial regulation is very clearly structured. It is worked out in great detail. And so it was fairly easy, I would say, to come with a new category for crypto assets that forms part of the financial regulatory field, which is the MiCA regulation. So what we did with the MiCA regulation is basically that we took things like MiFID for financial instruments, for securities, the market abuse regulation and directive, and also the prospectus directive, and we made a light version out of it. And this is to enable the space in terms of crypto assets that are issued and then dealt by intermediaries. That is also very important to know, because this sort of political approach is based on the notion of intermediary. We call them crypto asset service providers, CASPs, but this is a very specific, indeed small part of the whole crypto universe that is otherwise decentralized. Now, let me stick for a moment with MiCA, although it's not the main topic of our discussion today, but it explains the philosophy. Most people think that this financial regulation at European level came as a response to the Libra project, so to the big techs. And of course, that played a role, but actually, the first draft of the largest part of the MiCA regulation, at least in terms of substance, came 2 years before. It came in 2017 when we had the ICO hype that created great hopes, but then got a little bit derailed. So that's the moment when we decided that in order to further help this crypto space, this blockchain space to develop, which rules could we potentially set up to enable the market players to reap the opportunities? And MiCA has 3 pillars. And of these 3 pillars, 2 pillars were already drafted in 2017. And these 2 pillars are, and that may sound a little bit strange, the first pillar is the exemptions. So actually we have a regulation saying what is not regulated. And if you read the MiCA regulation, what is not regulated is DeFi, is DAOs, is NFTs, is cryptocurrencies, Bitcoin mining, and is a number of other things that are decentralized. We very clearly say that the limited risks in these areas do not merit financial regulation because we have a risk-based approach and we do not see the risks. I mean, there are certain risks, but not to that level that they require regulation. These are exempted. The second pillar, and that is the main part of the MiCA regulation, are the utility tokens. There's a diverse set of tokens that might have an ancillary financial function, but basically what they do is they help you develop and exploit a good or a service and give you access to that good or service. So sort of voucher or sort of whatever you can do in order to have access, which uses the principles of the decentralized economy of the platform. So to bring the 2 market sides directly together to interact. When you develop a project and think of software or think of something else, you get a direct interaction between the developer and the crowd in order to, let's say, improve the project in order to have better access and stuff like that. And this we wanted to regulate very lightly. So what we invented, and that's a novelty, is that we said if you issue a token, so a utility token, as we call it in this sense here, you draft the white paper. It's not a prospectus. You send the white paper to your national regulator. You don't wait for approval, but you can already start your project. We have returned the burden of proof. So the burden of proof is on the national regulator. And then you have a passport for 30 countries, for the 27 EU countries plus 3 associated countries. That, in my opinion, is revolutionary in terms of financial market regulation, because it's a very, very liberal approach. And only when then the Libra project came about, we had the call by politicians to also govern the stablecoins. We weren't supposed to call them stablecoins because politicians think that by default that cannot be stable, so they shouldn't be called stablecoins. So we gave them different names. But the clear indication, and that is in the public domain, so I can speak about that, is that we should prohibit all of that because it's dangerous. Now, when you see the MiCA regulation, we prohibited nothing. But we set out very clearly the rules for reserves, the rules for governance, the rules for many other mechanisms that we see as relevant in this context here. So that is just one example to show you what we see as the positive space for crypto and how we want to develop it. But I mentioned the token economy at the beginning, of course, that goes much deeper. Tokenization is revolutionary in the sense that it can fragmentalize every type of real-world asset that you have, make it faster, cheaper, more accessibly tradable on platforms all over the place. And this gives completely new approach towards raising finance, towards ownership, towards social control, which also relates to all sorts of other things. I mean, you needn't only think of that in terms of luxury items, but think that, for example, in terms of social housing, where for the moment we have very concrete examples of DAOs working on social housing or other things. Think of the services offered by communes and the public sector, so your public library or any other infrastructure project that you have, where you can have a much better implementation and inclusion of the local population to bring in their ideas, to have a regular voting mechanism to govern the whole process, which is, I would say, not possible with previous technologies. But think also in terms of industry application, and this is, of course, which is my core business. What most people do not know is that when we develop the blockchain space in Europe, we not only have the MiCA regulation, we not only have the DLT pilot project, we're not talking about all these other financial aspects, but for example, for the last 5 years, we have been working on an open source blockchain infrastructure to detect fake products. 7% of our imports into Europe are fake products, which is costing billions. And in the context of securing value chains, we have for the last 5 years been working on a system that uses a digital twin where the information exchange at the origin of the product or service when it is created. The journey is done by the physical product and by the digital twin, the information exchange based on NFTs that have a very useful application there, as in many other real world contexts as well. And the integrity of the whole process is ensured by data on the blockchain that is accessible in an open source platform, as I said. This is not only theory, this is not at the proof of concept, this is beyond that, and that will be reality in 2 years' time. So we are heavily investing in things like this, which in a way is what enterprises very much need, also with a view to Industry 4.0 and Web 3, where in the future, what we're discussing basically, of course, is code. And this is also a discussion that we had in the past discussion on the digital euro on programmability. What we are talking here is code that can have a legal and economic, technical meaning whatsoever. But at the end of the day, it's a coherent thing that comes together where the various parts and services are completely melting into one thing. And that has to be interpreted from that perspective, governed then by smart contracts. And there is, of course, a very big necessity from an industry perspective to give identity, digital identity, not only to companies and people, but also to machines, to ensure micropayments, to have them effectively automated and to have that in real time. So that basically when you tokenize, for example, a capital good that can be utility vehicle or whatever, at the moment you switch off the power, you have settled everything on a blockchain, including finance, insurance, bookkeeping, etc. And these use cases are out there. So perhaps to conclude on that part, what we've done, I think we are way beyond any discussion about the usefulness of blockchain or the question whether that is a scam or fraud or whatever. These discussions are silly. These discussions are long gone. These discussions, we will not bother any longer about it. We are building, we are working, we are making, because we are thinking that this is an integral part of the future. And the next commission will take in a way that we have to discuss, and we're having a lot of discussions at the moment with politicians, with regulators, but of course mainly with industry, with crypto players, etc., to see what is technically feasible. How will we go even deeper in the matter? And the next step is the most complicated one that we had so far, but it is also, in my opinion, and I'm very heavily working on this, the most relevant in this regard. And that is what meaning, also what legal and perhaps regulatory status we give to the notion of decentrality. What we are talking on blockchain is true decentrality, and what we have in regulation is no approach whatsoever based on current regulation, traditional regulation to that decentrality, because we are focused, as said, on the notion of intermediary. So what we are discussing here is not individual liability, but it is collective liability. It is collective liability, for example, in a form of DAOs, or what would be probably better, digital autonomous cooperatives, because we had for thousands of years, we had real economy cooperatives out of there, which basically did the same job, not just digitized. So they come together, they do a certain thing, and they needn't be visible in detail to the outside world. But of course, their actions need to be linked with the mechanisms of others. So concretely, when you have a DAO, it is, I would say, in my opinion, not necessary, but this is my personal opinion, to disclose identity. It is not, I think, important to show who precisely did what and took what decision. That is for the DAO as an entity. But of course, when the DAO does something that has legal implications, when they are sued, whenever there is a regulatory requirement to be met, the DAO must be held responsible. That's the discussion of the legal wrapper. And it's a very open question of how that can be done, because we usually start with another perspective. We usually start top down with KYC, AML, with all these things where everyone needs to know in detail who they deal with in order to start doing anything. But this is not, I would say, the philosophy that we are approaching to the blockchain technology, which means that we must look much closer into civil law principles to see how we can deal with that collective liability. At the end of the day, and I will conclude there, is that this is basically a reflection of our approach to data. The first crypto and blockchain regulation that we had in Europe was not the MiCA regulation. The first regulation is the General Data Protection Regulation, because everything that we do in terms of finance and technology development is based on data. And the reason why we treat data in a specific way is we see people and their interactions according to the data streams. So let me explain that in 1 minute, and then I come to the conclusion. We think that, and I'll be very radical in what I'm saying with a grain of salt, an individual is nothing. An individual has different parts that interacts in communities with other individuals. That can be families, that can be work, that can be clubs, political parties, whatever you are doing. And every action, every data stream is created in a specific context for that community. So the communities have a sort of interaction and life, and part of your individual role goes into that community. And what we're actually discussing as a starting point when it comes to identity, when it comes to privacy, when it comes to the effects of all of this, is what the community does in its entity, but not what you as a person in all your different functions does. And this is why this understanding of data, also where we store data, the role of privacy that we discussed also in the context of the digital euro, is so fundamentally important to everything that we do, which is of course why we're exploring everything that was also asked, zero knowledge proofs, soulbound tokens, etc. A lot of our industry applications already apply that for the digital product passport, etc. It's like the COVID passport. At the end of the day, no one needs to know the details. It's either green or red for a certain functionality, and that is all you need to know. And this is basically the starting point for the whole development of the blockchain space. So to wrap up, blockchain will not only stay with us, it will be a priority and will remain a priority. I'm very happy that the Belgian Council presidency that starts in January is expressing that it will for the first time make blockchain one of its priorities also for Europe to develop that space that I'm discussing further. We have very good discussions with a lot of companies that are ready in Europe to scale. We have startups for all these different fields that are emerging. And I can only recommend diving a little bit deeper into these matters. Also learn, of course, from what is happening globally, because for the first time we have a technology that is applied everywhere on the world, not only in the rich countries, not only in the traditional big players, but really everywhere bringing benefits. And we also, of course, in Europe can learn a lot of things from the applications in Africa and Central America and Asia, everywhere where this is being deployed. And we count on you, of course, for the meaningful discussion of the use cases and developing this further, knowing that whatever is being said in the short term, whatever crypto winter might be around there, let's forget all about this. This is something which will very much scale in the next couple of years. Thank you very much for your attention, and hand back to Katharina.
Joachim, thank you so much for this wonderful ride through all these specific kind of facets and for the vision you also again placed here, which helps us to understand the importance of this technology in many ways. So therefore, once again, thank you so much for your insights. I really like the term "you count on us." So that's why we're doing kind of these conferences, to bring people together, to create that kind of understanding, and to see in which direction we need to develop not only the network, but also the kind of use cases, so that we can apply more and that we find more and more of these use cases in business and in the way how we are dealing with our environment. As for now, I haven't seen so many questions, but I know that probably one or two of the participants would like to ask a question. May I invite you? Because I think there was so much, so many details we all have heard and seen here. So probably you are willing, or you have a question you would like to ask to Dr. Schwerin. Any question? Well, I have a question, probably not really a question, but I think that what you've mentioned about MiCA, digital euro, and the metaverse, so that what the European Commission already has done, and that the European Commission has taken this into consideration, that this is the future. We need to tackle this. We need to deal with this. I like this a lot, to highlight this, because usually what we are thinking is that government is far too slow and that they are not taking things like this into consideration. It's just always coming from the business side, or probably it comes a bit from academia, because they are in their ivory tower, sorry, not German, ivory tower, and that they are developing these kind of crazy things. But I really appreciate a lot that also the European Union and the European Commission taking things like this into consideration and looking for solutions, or at least for ways to how to tackle with these things. So therefore, once again, from my side, thank you so much for sharing your insights and giving us this kind of very good spirit of what is going on. Any further question? If not, I would like to say, Oliver is waving the hand, so then please, Oliver, jump in.
This is really fascinating stuff. And I'm surprised and mesmerized, and also surprised how advanced the European Union is already on that subject. I have one question. Thinking about what will be your blockchain initiative looking like in 5 years' time, is this going to be compatible with the entire European Union, especially with those countries that are applying for EU membership, or will we have a digital Europe at 2 speeds?
That's an interesting question, because we have a lot of, indeed, different countries at different level. What I would say, without going on, of course, into detail of every country, is that there is probably a deeper convergence than we think. Look at our traditional indicators. When you look at the indices on digitalization in Europe, you always end up with Romania and Bulgaria being last in terms of digitalization. Whereas when you look at the use of smartphones and decentralized platforms for things that we are discussing here, they are among the leaders. Which of course simply shows that where you have a less stable legacy system, to put it this way, is that you have more room for innovation when it comes to new technologies in this space here. And of course, a number of candidates take this very seriously. Also, I know from certain candidate countries that they deliberately intend to take the lead on digitalization in this regard here, because they have disruption in their own countries, and they see, I would say, the integration of the interaction on production services, but also communication of their population, of their communities on platforms that we are discussing here as a key lever to get out of this situation. At the end of the day, however, my opinion is that it rises and falls with the skills that are not only in the private sector, but also in the public sector. And take MiCA as an example. We have a text of MiCA out there, and I'm not discussing whether it's good or bad, but I think it's something in the open that creates legal certainty and transparency. We might not like every detail, but it is a starting point for a discussion. But now we are discussing the technical and administrative standards. And on that, the Commission has very little to say, because this is the regulatory bodies, but also the national authorities that will need to put educated people in these positions to be able to interpret and govern that properly. And that is a huge challenge in most countries, because we have a very complex, rapidly evolving field here, where the education on this is still more or less in its infancy. And the hope that I have currently, and that is also what I'm saying in a lot of other regards, is that we have a new generation that is growing very easily and generically into these new technologies. That is especially also like where most of this innovation is coming from. That is coming from the gaming space. We have 4 billion gamers, and the young generation is gamefully deploying tokens and everything that we have in crypto and developing this further. These people will, of course, enter the job market, will grow into these positions, but we have an interim period where, of course, we are in a challenged situation where still the power is in generations that have not been too much exposed to these technologies here, and therefore it's a transition period. It's, in my opinion, historically speaking, the same transition that we saw after the fall of the Iron Curtain, when we had the discussion from going to centrally planned economies to market economies. It was more of a new generation taking over than the old people, to say so, to be re-educated in a specific way. So we might have frictions, but I would say in 10, 15, 20 years, we will be there. And then I think especially the accession countries in a very good position to live up to that. So thank you very much for the question. Excellent question. And Katharina, thank you very much for having me here. Unfortunately, I have another appointment at 2 o'clock, so I will have to drop out. But if anyone wants to continue the discussion, Katharina knows where to find me.
I know where to find you. And thank you so much. We appreciate that so much that you just squeeze us in. Thank you for having you here at the conference. Thank you. Bye.
My pleasure.
Have a great day.
Thank you.
Thank you. Thank you. So, well, I think this is amazing. That was a very amazing speech. And Oliver, as you can see, well, probably it will not be you who will get all the stuff, because you are always a little bit like, why do we need blockchain? So therefore, you see, your kids will probably more embrace these new things. And let's see what they are doing out of this.
Yes, Katharina.
What we are doing right
this is scaring me.
No, it's not.
Apology, terrible idea. No, nevertheless, over to you.
I would like to move on, because what we are doing right now, we again are now heading up to our second slot of breakout session. And again, my dear co-hosts, please be so kind and record what you are hearing and what you are listening to, because later on we would like to publish this on our website so that everyone can look after and listen to this. And so for all participants, you do not have to fear that you are going to miss anything. It's all recorded, and it will be accessible or available for you pretty soon. So therefore, Jette, please, can you now open us the 3 breakout sessions? And we as the hosts are opening them. Again, I do a little teaser now of time for my breakout session. We will have finance here. Probably you like to join in finance and see what's up there. So see you soon, and yeah, till then. Wonderful. That's great. So here we are back again, and I hope you could all make this in your slots, because I was like cut off while talking, but it's great. It's wonderful. So what are we doing here? And I see Thomas is with us today. We have 3 things left for today, and I really would like to discuss this with all of you. What we can do, and I have to say, we can't do any further water cooler talks. Even I would like to do this, because to get you and bring you in touch, we are late. We are running out of time. Well, that's it. But what we can do right now, we could jump on a stay here in the main room, and Thomas, I need to know, Thomas, where are you? Where are you? I can't see you right now.
I'm here.
How much time do you have to, he's in Vienna too, so he has the same box as Joachim Schwerin had, so therefore,
exactly.
Please, Thomas. Yeah, exactly. It looks like the same. So probably, Thomas, can you tell us how much time do you have right now?
You mean how much time I have until I have to leave, or how much time I need for my presentation?
Until you have to, yes. Yeah. No. Until you have to leave.
Or I have to leave at about 4. It doesn't really matter. I can shift that.
Okay, so because of what we are doing, we have 2 options. Option number 1 is no, 3 options. Option number 1 is we start right now with Thomas. According to that, you are in Vienna at a conference, and then you probably need to jump out quick and fast. That is option number 1. Option number 2 is we now go once again back to our breakout rooms and continue the talks. Like we have Daud left. Daud will talk about a very interesting approach for NFTs and sorry, I'm currently not 100% on my screen, so have to check your topic again. It's well, that's the wrong one. Or is this? Daud, please help me out.
I can say something to it. Yeah. So I'm talking about a new. Yeah, I'm talking about a new product based on NFTs, which can be used for city marketing, and I try to apply it to that use case, Adama.
Wonderful. And on the other side, in the education and / legal group, we will have Petra Butler, who will talk about inequality, or let me just see, inequality in access to justice. So we have these 2 talks for parallel session left, and the main talk from Thomas. So my recommendation would be, or my question to all of you in regard to the time, shall we go back to our breakout sessions, option number 2, or shall we leave the floor for all speakers here in the main room, which means that we all are attending here the main room, and that would be we start with Thomas, we move on with Daud, and we will end with Petra coming up to the justice part. Would this be like the best idea? I see some people are nodding. You like this? So could you please sum up whether you agree that we now stay all here in the main room? We are handing over the microphone to Thomas, Dr. Thomas Duenser, who is in Vienna, and yes, as I mentioned that before. And then after Thomas, Daud, yeah, it's you. And Petra, you will conclude, you will end our online conference, and then we will have a little sum up because we are running so much out of time, and then the conference day is almost done. So with this, I'd like to hand over the microphone to Thomas. And Thomas, I think it's the best you are going to introduce yourself, because who can do it better than you? Please, Thomas, the floor is yours.
Thank you, Katharina. That's very nice. So can you hear me? Okay, that's good.
Yes, we can hear you very well.
I think you have noticed from Joachim before, it's a bit difficult circumstances, so I'm here a bit in an open office space. But if somebody talks in, it's not me or my second me. It's just somebody just walking by. I hope this is okay. So it's a great honor to have the second last speech, or third last speech maybe today, and I hope you enjoyed the conference up today. So I now want to talk with you about decentralized finance, and I hope I can share the screen with you. I think this one should be correct. Can you see it?
It's
okay,
yes,
perfect.
Now we can see this. Thank you.
Okay. So the term decentralized finance might be a bit of a buzzword. So I need to explain what I mean with that. So for me, decentralized finance is about all functions of the financial system brought on blockchain. It's not so some people from the early stage from Bitcoin thought that with the invention of Bitcoin we don't need a financial system anymore. I don't think that's true. So finance is much more, and I want to talk with you about the financial system and what is the positive aspect of blockchain. If you look at the problems we have now in the financial system. And so the first, okay, it's possible to do that, okay. So the first point I want to discuss with you is the topic of resilience. So if you look at the existing financial system 10 years back or 15 years back, we had the last financial crisis, and the insolvency of one major bank triggered a huge problem throughout the world, I would say. So I just picked out some numbers of some European countries like Portugal or Greece or Germany and also Switzerland. So many countries after this trigger event of the Lehman Brothers collapse had to increase government debts, had to do spending cuts, local riots have been the consequences. And when we go no further to last year, this year, we have seen some further banks collapsing. So when we survived the last financial crisis, we hope that this will never happen again. And what we have seen in the last year is that it's not over. It just was maybe a calm phase. And even in Switzerland with the Credit Suisse was a huge problem. So basically, the structure of the financial system doesn't really hasn't changed. So the vulnerability still is there. And in the next slide, I just want to explain you a bit as a former risk manager of a bank, what is the main reason why the banking system and also the banks are inherently unstable. And we always have to face those challenges that we see now. And to my opinion, the root or the main reason for the problems we have every decade maybe in the financial sector is that we needed bank up to now for the creation of digital money and transform money transfer or payments. And the reason is because banks are providing the register, the ledger that is necessary to create digital money and payments. It has more a legacy reason, but it is like it is. And then the next point is that banks are using client deposits for credit business. So the money you give the bank on a bank account is not there in a vault and in safe custody. The bank is using that and investing that in credits, in mortgage credits, and so on. And this causes risks to every bank. So like liquidity risks or credit risks. So and in case of liquidity risk, that means if a certain amount of deposits are withdrawn in a short time, every bank will collapse. So this is just it's a fact that we know from this the sector. There is one aspect that is it's important to mention, that we have also the interbank market. So banks are using the interbank market to shift liquidity, and this also triggers further liquidity risks and credit risks. That means that banks are just very cautious when they are lending money to other banks. So if a bank is just noticing that another bank has problems, they withdraw their money as soon as possible, which can also cause some liquidity problems. So that kind of, and this is what I tried to mention with my last error, that it's kind of a self-amplification system that we see in the banking sector. So this means that the collapse of one bank always can trigger a kind of a domino effect or an avalanche effect in the interbank market, which triggers a financial crisis or maybe an economic crisis. So the effect of a banking crisis we have seen in the last banking crisis, a financial crisis in 2008 to 2010. So that's we have a risk to all deposit holders and also risk to the payment system, the risk of a financial crisis, but also the risk of an economic crisis and turbulences in financial markets, that pension schemes or pension funds might be in a danger. This all is our situation because the banking sector is so important that governments might come in a position that they have to save banks and to increase the government debt. And this is not really a good situation, to be honest. And now to come to blockchain, and I mentioned blockchain because of its. So we have problems in the financial system, and blockchain is, for one reason, a true game changer. Can you maybe just? Okay, so you can see the whole screen. So and the reason is because blockchain can provide genuine digital money. So there is no need for banks for the creation, for the storage and the transfer of digital money. So and this makes it possible that with blockchain, on the fundament of blockchain, it is possible to create a resilient money and payment system. And this is radically new. This was not possible before the invention of Bitcoin. So this is a huge chance we have now. But the results we have seen in the last month or 2 years, and the problems we have seen have make it clear that it's not. It does not need necessarily to come that way. So we need to define that and use this opportunity to shape a resilient financial system. But it is possible. The second point I want to mention is the question of efficiency. And first of all, I tried to estimate the costs of our banking system, and it's not so easy because it's not really transparent. I try to figure out how many fees do we pay for bank accounts in Europe. I'm an engineer, so I'm used to make just a rough estimation. It's more a guess, but I think it's helpful. So I try to estimate the number of bank accounts we have in Europe. It's about, I assumed that we have 50% of all private persons have a bank account, and all companies have a bank account, and the average fee per bank account per year is about 100 euro. This is a amount I found in Germany. In Liechtenstein, Switzerland is a bit it's more expensive. In other countries it might be a bit cheaper. But this leads us to an estimation that we pay every year in Europe about 20 billion euro just for the creation, storage, and internal payments of digital money, which is quite a lot, I would say. The second guess I tried to make is about the credit card fees that we pay every year in the euro area. So the ECB published some numbers. So it's about 79 trillion euros are transferred by credit cards each year. If you assume an average fee per credit card of 1.5%, we land at 1.4 trillion euros that we pay as fees for just to pay in stores, hotels, and e-shops, and so on. And this is also quite a huge figure. And if you assume that this is far too much, if it's half, it's quite a lot. So, and if you compare to blockchain, and this is also not easy to compare because we have several blockchains, we have several technologies. I just try to make some comparable numbers. And if you look at some important blockchains, Bitcoin, we have it's the status of last Wednesday, average transaction fees of $2.50. Ethereum is a bit more expensive, $3 per transaction, and all other blockchains are far cheaper. So a fraction of a cent maybe, or 5 cents. And if you extrapolate that on the number of transactions in Eurozone, we see a comparable figure what it means in comparison to the figures we have seen before. And so we see that even with the most expensive system, if it would be possible to use blockchain or Bitcoin for so many transactions that we are doing in Europe, it's still a fraction of what we pay in total for the credit card system and the banking system. So just the main message, it could be worth to have a look at blockchain as a transaction system. Second point I want to stress out is the energy consumption. And there are many figures just in the internet or in newspapers about the energy